Hello and welcome again to the Bullish on Bitcoin show. Today we are talking about Bitcoin DeFi. Is it dead or is it alive? We have a true OG builder with us here today, Jacob Phillips from Lombard. They've been building in the space for the last couple of years. One of the, I would say, most successful Bitcoin DeFi projects that has come out of the recent hype. Jacob, thank you so much for joining us.
Yeah, thanks for having me, Alexei. It's a true honor to be called an OG by someone who's been building for far longer in the Bitcoin space than I have. So appreciate that.
Well, I mean, OG doesn't mean how much. I mean, for me, an OG is not necessarily someone who's spent many years, but actually someone who's really contributed to the space. And Lombard, even though you guys under the Lombard brand perhaps have not been around 10 years ago, I would say you guys have contributed a lot more than some other projects have done in the last 10 years. So
yeah, makes sense. And I'm sure we're going to get into that.
I'm sure we will. Jacob, I mean. You guys, I mean, perhaps, I always like asking these questions. How did you end up building on Bitcoin? What's the journey and why Bitcoin? And for example, not necessarily, built Ethereum or Solana. Would you consider yourself a maxi?
Certainly wouldn't consider myself BTC maxi. And I wouldn't even say that I like chose Bitcoin over Ethereum or Solana. It was the short way I describe it is that I was a DeFi guy getting into the Bitcoin space rather than a Bitcoin guy getting into the DeFi space. I started my crypto journey off in the investing space. So I worked at a couple different funds, most notably of which was Polychain, where I was at for 3.5 years. While I was there was always this very, very obvious opportunity that DeFi was like this tiny little subspace of crypto. Meanwhile, there was just begging for capital. Meanwhile, there's $1 trillion plus in Bitcoin sitting on the sidelines. If you could bridge all that Bitcoin, you could multiply the size of DeFi and overnight. So everybody recognized there was a big opportunity, and I had tried investing in the space a little bit, kind of unsuccessfully. Had sort of been watching it on the radar, and fast forward to April 2024, and I think that the timing was just right. It felt like Bitcoin DeFi for the first time ever had a very very substantial catalyst in front of it in the form of, people were excited to stake their Ethereum and even restake their Ethereum. People were staking all these different assets. Now there was a staking mechanism for Bitcoin, which was going to be a catalyst to bring a lot of Bitcoin on chain, of course, and then my goal with Lombard, of course, was to channel this into on-chain finance. So, one of the coolest parts about working at Lombard has been that I've got to work with all of the best DeFi protocols in the game. Every DeFi protocol, anybody who's building in crypto right now is thinking about Bitcoin. And it's like Bitcoin, stable coins. There's maybe nothing else that's, all that relevant. Maybe you get some ETH and Solana in there. But otherwise, everybody needs loads of capital. Almost all the on-chain finance protocols are built upon, one foundational metric, which is, can you drive capital to the protocol or not? So I think BTC has been a primary way in the past, maybe 2 years since Lombard's been started, where new chains and new DeFi protocols are able to, compete with existing liquidity, or at least one area of differentiation through which they might explore it. So I sort of think of myself on the DeFi side, trying to bring Bitcoin in rather than the other way around. However, I would say, and I wonder if this resonates with you quite a bit. The longer I spend in the Bitcoin space, the more I realize that while we had a ton of success with the initial approach of kind of outside in, we're like the DeFi guys onboarding Bitcoin. I think it was an incredibly successful approach when we first started. Especially in a market like this, we're sort or what maybe it's like in a market like this, plus once you get to a certain point of scale, the need to go deeper and deeper into the Bitcoin space and become more sort of like Bitcoin aligned, start finding these deeper pockets of capital that you can sort of only uncover if you're like extremely Bitcoin native, has certainly come to the forefront.
Yeah, Bitcoin is it's a really tricky beast to tame. It's I would say that, you have, ecosystems, and certainly Tron and, Solana, Ethereum, Polkadot, like all these OG ecosystems have like a core group of maxis and people who are very active and quite toxic against everybody else. But these things, they came along much later than Bitcoin. Bitcoin was around for so long and built such a strong OG community. It also was the only one, right? It had no competition for the longest time. You had altcoins, you had other things, but at the end of the day, Bitcoin just has such a big group of people that care about it, and you can basically consider it like the bedrock beneath all of crypto. And I barely know anyone who is, building on Solana or Ethereum or somewhere else and says, yeah, Bitcoin sucks, and like they want to replace Bitcoin with something else. It doesn't really exist anymore. I think everybody has accepted that Bitcoin is the only credibly neutral digital asset that comes out of the crypto space. Ethereum tried to challenge Bitcoin as a currency, and that didn't work. And now Ethereum is kind of being challenged on the arena of compute, and is having a bit of an identity crisis. But Bitcoin has remained unchallenged for the longest time now. So there's a very strong core community, and people join Bitcoin for different reasons. And I think that is a big distinguishing factor between like Ethereum communities and the Solana communities. There, it's a lot to do with innovation, new use cases, people who want to do something new, and or join because there is a way to make money and to speculate, to trade. But the people who got into Bitcoin got into it out of other reasons as well, like long-term savings, or they basically got debanked. And it's such a diverse community, so it's really hard to navigate. And from our experience, speed running Bitcoin is quite difficult. I think many teams have tried to kind of get into Bitcoin, speed run it, and then what will happen is like Bitcoin will chew you up and spit you out. I think Lombard has done a really good job of going from a principles first approach and like, okay, what are the real problems that people are having who want Bitcoin and DeFi, and solving that for this, I would say, quite big user group. But I agree, like I'm happy to dig deeper about what actually is the key to unlocking the remaining 50% plus of Bitcoin that sits not in exchanges but in off-chain wallets. Like, is productive Bitcoin, I mean, maybe that's the first question we could have into, like, is productive BTC really a problem that Bitcoiners have today?
Yeah, a great question. And I'll tie it into one thing you said, and then another thought I had as you were speaking, which is you mentioned that people have tried to speedrun Bitcoin. It's never really worked. And the whole space is like relatively difficult to navigate. I feel like we always talk about Bitcoin as this like ubiquitous uniform thing, when really there are, I mean, you could take the whatever it is, $1.5 trillion now, $2 trillion in Bitcoin capital, and like break it down, because Bitcoin is supreme, the sort of largest source of value in all of crypto. It really is like the whole crypto space packed into one asset class, which means that you have pockets of Bitcoin that are extremely crypto native, or extremely DeFi native for that matter, which look like guys like you and me. And then there's other pockets of capital that are like the kind of the dark horse of crypto, the people you never hear about, the OG Bitcoiners from way back when, who don't even want to use a custodian. They only trust their little multi-sig setup that they have or something like that. And there's everything in between. So it's almost hard to talk about Bitcoin in a broad sense, because as you and I think a lot of people try to attack it as like, oh, I'm going after Bitcoin holders. What does that mean? I have to start acting a certain way. I have to start, assimilating with a certain set of values. And it's really not that. I mean, there's just so much Bitcoin out there that it's really, the name of the game is just starting somewhere, finding some pool of capital or some pocket of Bitcoin that you assimilate with to even get started. On the productive Bitcoin side, Bitcoin is incredibly useful. Like, the productive Bitcoin narrative has, it's funny, like every on-chain Bitcoin DeFi protocol or adjacent protocol, anybody in the Bitcoin DeFi space is pushing this narrative of Bitcoin should be productive. But Bitcoin is already incredibly productive. It's one of the only assets that's productive off-chain. I mean, centralized exchanges were built entirely on Bitcoin. Bitcoin's very useful off-chain. There were periods of time when BTC was the foundation of perps on BitMEX. Deribit used to be exclusively collateralized in BTC. up until like 2021 or something like that, maybe 2022. I can't remember, but like incredibly long time. And then you know, in the glory days of BlockFi and Celsius and all of these off-chain lenders, Bitcoin was the dominant collateral in all of that activity. And even today, it's like, you know, when you look at borrow lend protocols, I think if you strip out all of the looping activity, the sort of, you know, Athena style leverage and stablecoin leverage, you end up with Bitcoin as the dominant collateral. So BTC is extremely productive. I think sometimes that narrative just gets twisted a little bit too much, doesn't it? Like, you know, Bitcoiners want to put their Bitcoin to work in sort of sensible ways, but like maybe it's that the productive Bitcoin narrative gets twisted with the Bitcoin yield narrative too much, and it's like, you know, I think we're kind of finding that you know, the whole idea of Bitcoiners, you want to use their Bitcoin as collateral. That's very battle tested, very clear at this point. There's probably a little bit less demand for like gambling your Bitcoin away, which, you know, frankly is what a good portion of DeFi, you know, tends to look like. Certainly the sexy parts of DeFi are largely predicated on like taking on additional risk to get additional reward. And we're certainly I don't think that really works in the Bitcoin space. Though yield, of course, has been a massive catalyst, I think, in sort of persuading Bitcoin users to come on chain. I don't necessarily think it's the end all be all. But I think what I definitely feel, you know, I'm sure you'd agree with this at least to some extent. But it's like Bitcoin's very productive off chain. The real pitch here is, you know, I almost find myself pitching the benefits of on chain finance at this point more than I pitch the idea of productive Bitcoin, because everybody, you know, most of the people I'm talking to at this point, I feel like are using their Bitcoin somehow. They're like lending it through Galaxy, or they're borrowing against it on some other venue. Now that the pitch is like, why should I use it on chain? Does that resonate?
Yeah, I mean, I think this is a very good point. Like, people use BTC already. I mean, there is a group of people that, you know, sees Bitcoin as a safe haven investment. A lot of DeFi users actually don't invest their BTC. For them, it's like the part of their portfolio that they just don't touch. And then they have their stables, and like they have like a DeFi portion where they speculate. And sure, like basically you could still convince them to allocate that DeFi portion into Bitcoin to earn yield, but then the yields on Bitcoin are typically lower. So there is no incentive. But then the BTC that they have, and we've spoken, like I'm sure as a view, right? Like the appetite for high yield on BTC is quite low among like large Bitcoin holders, and a large portion of Bitcoin holders. Their security and trust is a much more important thing. Like my experience has been that the one thing that a Bitcoiner, like somebody who really is, I mean, you could call an OG, right, a power user that you would want to convince to use like your protocol if you're building on Bitcoin, the one thing that they do not want to do is lose the Bitcoin. Like that's like the worst thing, right, that can happen.
Yeah.
And that means that the risk appetite is generally quite low. So what we've seen as a result of this, and there's like also funds, right, that you know have a lot of BTC, and I mean, we've had the same conversations. You know, we've talked to the same people in the space. A lot of times during the Bitcoin DeFi summer, this DeFi hype run with so many L2s, what you'd see, and it started like with, I mean, this one we can say out loud, right? It started with like Merlin, right, and the whole debate of whether their TVL was real or not, because it was all actually just sitting in a custodian.
Yep.
But why did that happen? Because I mean, they found someone who wanted yield on Bitcoin, but they didn't want to give away custody. They want like the holy grail. Like, I keep my Bitcoin, it can never get stolen, but I still want yield on it, which is a very tough problem to solve, right? It's like really, really tough nut to crack, because either you just pay for nothing when somebody is willing to provide incentives for the numbers to look good, or you need to dig into cryptographic primitives, which again then break the whole premise of security, because it's not trusted in the sense of you trust a third party, but then you have a completely new cryptographic primitive, which you will be surprised the whale trusts even less than their custodian.
Yeah. I think anybody would love to take on zero risk and get a ton of reward, which seemed to be the early pitch to Bitcoiners who were coming on chain. I think what you know, in this whole, you know, is Bitcoin being put to work, or does Bitcoin want to be put to work debate. Bitcoin DeFi sort of, I'm glad you brought up kind of Merlin and these initial L2s. One of the best framings for why Bitcoin DeFi took off was to, that I've heard, is to sort of fill the yield gap, where there used to be good ways to earn yield on your Bitcoin off chain. Once those dried up, somebody had to, kind of swoop in. And the early way in which this happened was external incentives, token incentives via Bitcoin L2s and early protocols, right? Even the whole staking narrative was fueled via external incentives, rather than like true fundamental activity. So I think, in all of the days of Bitcoin DeFi, taking shortcuts has always been the way that people have sort of been playing. And this has helped get us this far, I think. And now I think we're kind of beyond that game. People sort of see through that, and now we're back to, does on-chain actually have any sort of fundamental ground, or are people just going to continue using their Bitcoin off-chain? Because what's definitely clear in retrospect is all of the different yield sources we're thinking of in DeFi, or not all of them, most of them have already been, like, every centralized exchange has been thinking about Bitcoin yield for years before anybody in the on-chain space was thinking about it. If there were easy ways to do it, that would have already been done. So whenever somebody comes up with like a new Bitcoin yield source and they're like, oh, I found this like magic thing, I always write it off almost immediately, because somebody's already thought of it and it doesn't work for some reason. I hope one day that the on-chain space, there will be so much Bitcoin on-chain that all of the sort of off-chain yield sources that currently dominate most of, Bitcoin DeFi, or most of the like Bitcoin yield, will migrate on-chain. And then you'll have like a true on-chain ecosystem. In the meantime, the bulk of Bitcoin use happens off-chain. Thus, the bulk of Bitcoin yield is probably off-chain in one form or another. So, of course, Bitcoin trading being the sort of dominant activity that then is the source for all of this yield. Kind of the same for stablecoin activity, I suppose.
Well, I mean, I think you make a very good point. Like on DeFi, it has innovations, right? Things that you have never seen off-chain before, but it's rather rare, right? I think DeFi has always been about what can we do better than TradFi, benefiting from the fact that it's all, interconnected. You have composability. You can connect these things. Everything is tokenized, so every position can be reused. Yep. Rather than coming up with a completely new strategy for trading. To be fair, again, perps didn't come from DeFi, right? They came from BitMEX, which was not the it's a centralized exchange at the end of the day. The interesting part here is really that if you look at Bitcoin yield today, and also the Bitcoin yield in DeFi, right? Like tokenized BTC yield positions, where does the yield typically come from? And realistically, the case is that trading volumes on chain and the amount of capital is on chain is not big enough to sustain the yield that you'd have to generate to actually convert a large portion of Bitcoin into DeFi. So what happens is that you have off-chain trading strategies that are then tokenized into DeFi to do more things in DeFi with it, which is, to be fair, a very cool use case, right? It's kind of bridging the gap in a smart way, and of course it comes with risks. But if done transparently, I think it's a very powerful tool to kind of get more capital on chain using Bitcoin as rails. And maybe then in a few years, as there's more capital, you can start running a more trading activity on chain. You can start running these strategies on chain. That was at least the hope. We're still obviously not quite there yet.
Yeah, there is some activity on chain. That's not to say there's no Bitcoin activity on chain to the point where you can't have fundamental Bitcoin yield. Lombard has a vault right now that we work with a group called Centaura, who runs a sort of rate arbitrage strategy that has scales up to some amount, but the cap on that isn't on the order of like low hundreds of millions versus the billions and billions of Bitcoin that we think we're going to onboard in the long term. And then there's also there's yield basis, which is based upon trading as a primitive. There may be some ways to kind of market make for that, but you're absolutely right. I mean, by and large, if you remove those or rather, even if you aggregated like all of the sort of fundamental yield that you could capture within the on-chain ecosystem, it's a tiny fraction. And frankly, if we thought that was where things were going to settle out at long term, neither you nor I would probably be building in the space. It's all because of the future of all of Bitcoin coming on chain in one method or another. I have yeah, go ahead if you want to say something.
No, go ahead.
I was just going to say, I certainly hope to see, Bitcoin activity come on chain in a really big way. Like, I think, you and I probably have some shared vision long term of Bitcoin moving off Bitcoin L1 onto, different platforms like Bob, Ethereum, Solana, wherever Bitcoin may go. And users now have access to, the world's hardest money, but without all of the trade-offs, the 10-minute block times, disconnected custody, whatever else. Now you have really fast Bitcoin that's interoperable with all the different DeFi solutions that you know and love. You can use your Bitcoin on Aave, you can trade it on your favorite DEX. It sits in your wallet just like all your other assets. That sort of, I think, is the ultimate dream. However, it's very clear to me that dream is going to take a lot longer to sort of pick up than I maybe had hoped. Maybe when I was starting Lombard, I would have said like this was a 3 to 5 year thesis. Now it's probably more like a 10-year thesis or something like that. But in the meantime, what is having like tremendous traction, I think, is Bitcoin as collateral. And maybe Bitcoin as collateral is sort of step one. It's like you have to get Bitcoin on chain somehow, and then you can start talking about doing other stuff with it. And the simplest use of this that without a doubt is finding product market fit right now is Bitcoin as collateral on lending venues, and maybe collateral within vaults. Though even the yield vaults a lot of times are built upon the primitive of Bitcoin as collateral to borrow stable coins, which are then put to use in a delta neutral manner. So certainly in a time like this where all of the external incentives that were sort of onboarding capital quickly are gone, and we're back to like the very fundamentals of what do Bitcoin holders care about, what pieces of on-chain finance are actually competitive with off-chain finance. I think collateral piece has become a big focus for me and for Lombard.
Yeah, I think you make a very good point, right? It's like Bitcoin has proven PMF as a collateral in DeFi. I mean, that was the main reason Bitcoin was ever bridged in the first place. If we remember MakerDAO and RWAs, right? WBTC became so big because it was accepted into MakerDAO as a collateral to mint DAI. And that's when the supply skyrocketed. It went from 100 to 100,000 RWAs. And if you look at the majority of Bitcoin that sits in DeFi today is actually used as collateral. Especially Bitcoin that has been really deployed. So I'm not talking about Bitcoin that sits in like off-chain vaults, which are like, you could almost say like self-custodial in some cases, but more like BTC that has been really moved and become productive. It's exclusive. I mean, and we have actually some interesting data points because, Bob's new trading engine, right? We actually are used quite a bit by people who want to go from Bitcoin into different Bitcoin wrappers. And you can see where the users are heading. And it's alpha, it's Morpho, and it's yield basis. That's basically where people go with their BTC. So what is it? It's trading or supplying because you can earn yield on Bitcoin while others trade on top, or you use it as collateral.
Yeah, 100%. So one of the the way Lombard got its start was that we had a collateral that also had yield built in, and this was in the heyday of Bitcoin staking. Eigenlayer was just earning people 3 or 4% restaking yield or something like that. So they were stacking staking yield and then stacking restaking yield, which of course in retrospect we know was just Eigenlayer incentives. There wasn't actually like any direct restaking yield. And of course then that was brought to Bitcoin. Then there was Bitcoin staking, which was at one point projected to be 3, 4, maybe even 5%, depending on where you stacked up those token incentives to be. And that was, those first few months after launching Lombard were incredible because we were growing at breakneck speed and Bitcoin was coming on chain at a faster rate than it ever had before. And so, on one hand, I think we learned a lot from that, which is when given enough incentive, Bitcoin is excited to come on chain, like eager. We had people reaching out to us trying to figure out how to get this on chain. There obviously are some reservations to drawing too many conclusions from that period because, as you mentioned, the yield was mostly, somewhat riskless. I mean, at least at that time, people were taking on technology risk, which I think is exciting. So a lot of these narratives that I think we sort of have in the back of our mind about Bitcoin, like Bitcoin isn't ready to come on chain or it doesn't want to take on certain types of risks, turn out to, I think, are at least challenged by the sort of history of how everything proceeded there. Now, fast forward, a year and a half later from that, where the incentives have died out, and now we're back to like fundamental Bitcoiners. What do they want to do? Where's the actual thesis? And I think you have we sort of presented with this new opportunity. I guess in my mind, like one of the things I sort of think about at night is like, how do I recreate what happened with the whole Bitcoin staking boom, in a way that's more fundamental. And we spent a lot of time exploring this. I mean, the epitome of all of this is LBTC, which was Lombard's core product at the very beginning, scaled up, went zero to $1 billion in 90 days, and then scaled up to almost $2.5 billion. Yield was 3-4%. Now yield is like 30 bips if you're staking with Lombard. If you're staking directly, I mean, it's like I think like Kraken has some BTC staking, and they earn like 5 or 6 bips on their Bitcoin or something like that. That's like basically nothing at this point. So now LBTC went from this like really great product now to like this. I mean, you're still earning some yield, so some yield's better than no yield, but it's certainly not the type of product that we envision. And we are in the process of probably within the next month or two are going to announce the sort of transition of LBTC into LBTC Phase 2, which is our sort of closest attempt to recreate the excitement that people had around using Bitcoin as collateral, but also being able to capture yield. Because like you mentioned earlier, Alexei, one of the biggest benefits of on-chain finance is the ability to transform regular collateral into superfluid collateral that's composable with lending protocols, with lending protocols and vaults, all these different protocols that have permissionless liquidity and structurally lower rates than what you can find off chain. People at this point seem to be pretty comfortable with Aave and Spark and Morpho and Camino and Jupyter Fluid, this kind of stuff. I mean, the lending protocols at this point, I think, have of course, there was some activity this year that perhaps shook trust to a degree, but by and large, I think the protocols fundamentally are still viewed as some of the safest places to put your capital. And it's kind of funny, Bitcoiners sitting here looking at the big kind of off-chain Bitcoin banks or whatever who are advertising rates at they're like, hey, borrow against your Bitcoin at these awesome rates, 10, 11, 12%. It's crazy when Aave and Morpho rates are sitting at 5 or 6% or something like that. So I would love to, sooner rather than later. I mean, maybe this is just me getting antsy. I want to try and recreate the sort of excitement of 2024 that we had with Bitcoin DeFi. Of course, we'll never be able to do it quite that way, given all the external incentives that were involved. But I mean, that was the most fun time to be building, when Bitcoiners were coming to us to onboard their Bitcoin rather than us having to beg them to do it.
I mean, I think there. I'm certainly positive that it is possible to recreate hype like that. It will probably have to be different. It'll probably mean that you're onboarding a new group of users that have very good reason to take their Bitcoin on chain. The thing is, we know that there's demand for collateral, Bitcoin as collateral. It has been for ages. You have entire businesses that were built on this, right? You have so many off-chain lenders that do nothing else. To this day, some of them are Bitcoin only, borrow against BTC. They set up tri-party agreements with a custodian in place, or the custodian itself is offering that. And they basically offer you your Bitcoin stays securely in custody. They cannot steal your BTC, and you can borrow against it. But then the rates are really not great. And I think the opportunity here is to do something that Ethena has done by essentially bridging the gap between off-chain and on-chain rates. Because on-chain, the rates are much better. It's just so much more efficient. And coming back to the point that you brought up in the beginning, ultimately, what we're doing right now is we're pitching on-chain finance to Bitcoiners who basically just need to be convinced that, yeah, on-chain is indeed better. And it's not just because it's on-chain. People don't care if it's on-chain or off-chain. On-chain is better because it is a better product. It's more transparent. The rates are more transparent. You have much fiercer competition between protocols. And LPs are much more efficient because they have full visibility of like, where can I put my stables, who pays how much. So the markets, in my opinion, on-chain, they will tend to be more efficient, and there's less hidden fees, there's less hidden risk than there is with an off-chain lender. Because with an off-chain lender, you don't know where the Bitcoin is, you don't know what they're doing with it, right? I mean, we've seen so many cases and so many lawsuits that are still ongoing with like off-chain lenders just misappropriating your funds, and then their custodian kind of messing up. Of course, and this kind of brings us to the question of wrappers. There is always the custody risk. Ultimately, you always will have that in Bitcoin, unless even with BitVM, right? There is some risk involved. So I think custody risk is but that's something that Bitcoiners are used to, right? Like there are the OG hardcore Bitcoiners that custody themselves, but you can't, if you want to borrow against it, there is no self-custodial way of borrowing it. You need to let the other person, get your Bitcoin if you default on the loan. Nobody's going to lend you dollars if you need to ask you whether you'll give them the Bitcoin as liquidation assets, right?
Yeah. It's kind of criminal anybody in DeFi ever convinced Bitcoin holders that there was a way around that, you referred to some of the early L2s who went around pitching to everybody, keep Bitcoin within your wallet. It doesn't leave your control at all and still earn rewards and still represent it on chain. That whole narrative, I think, set Bitcoin DeFi back quite a bit. Like if your Bitcoin isn't at risk, there's no chance you're getting a fundamental yield. That's economics 101.
Yeah. I think like where you can get to, right, and what we've seen like with Bitcoin vaults is you can get to a point where you can mitigate that risk and basically reduce the chances of something going wrong if you behave honestly. So if you repay your loan, you're going to get your Bitcoin back, unless like something really, really bad happens and you have all these fail safes in place. But then if you don't repay, if you default on your loan, the same thing applies to the lender, right? The lender of stable coins or dollars needs to be sure that, well, they will get the Bitcoin that they can liquidate in case there's a default. So you need to make sure that both parties are aligned. Like if it's Bitcoin is purely self-custodial, who's going to give you money for that? Yes, we had this period of time in the crazy Bitcoin yield days where everybody was paying incentives, but those times are over and the market's efficient.
Yeah. Maybe those times are over. Yeah. Okay, those times are definitely over. But I think part of what I was trying to say in my last segment, or the last kind of thing I was talking about was that there's sort of this transition where obviously those incentives were purely an onboarding game to bring capital, into the ecosystem. And then once capital's in the ecosystem, Bitcoin DeFi gets to this point of like product market fit and fundamental utility where, you sort of don't have to play these onboarding games to like kind of get people excited about this. I think we sort of, obviously there's a huge step up in that time frame. Like I think before, like let's look like before Bitcoin staking. People were sort of using Bitcoin on chain for collateral, but not all that much. I think like if you talk to like Aave or MakerDAO or one of the big lending protocols at that time, Bitcoin certainly wasn't a focus. Then you had this whole like crazy exogenous catalyst that onboarded a lot of Bitcoin, made Bitcoin like the hot topic. You had penned. I mean, every DeFi protocol launched some sort of Bitcoin strategy, basically realizing how much potential there was if they created the right conditions for Bitcoin to come on chain. Okay. Then all of those incentives dried up, which is kind of like where we've been for the past, let's say like past year or something like this. And in this time frame, I think all of the Bitcoin DeFi protocols have been back building very fundamental solutions. Like we're now at the point where, I think both of us have been working on solutions to solve that exact custody problem you've been talking about. This, of course, is one of the biggest blockers to bringing Bitcoin on chain. Every Bitcoiner has some, or many of these Bitcoiners, especially those at regulated institutions and funds, have specific custodians that they trust more than anything else to hold their keys. And they want that sort of custody setup to be interoperable with on-chain finance rather than, choose one or the other. So if you can unlock all that Bitcoin, then, there's this great thing. But just because we produce the technology to allow somebody to use Bitcoin in a custody account and represent it on, hold Bitcoin in a custody account and represent it on chain, doesn't actually mean that Bitcoin will come on chain. So we're sort of back to round two, like you said, with different parties now trying to play that exact same onboarding game of how do we bootstrap a new ecosystem with this capital? Because before, even round one of capital onboarding in 2024, 2025 was largely retail and crypto native capital. Now we built the technology to onboard institutional capital. And one of the biggest questions in my mind is how do I get that capital to move as fast as possible? All of us in the ecosystem would benefit from it. I mean, it's not just a Lombard or a Bob problem. I mean, it's almost like it's like a Lombard and Bob problem, and everybody else in Bitcoin sort of trying to figure out like how do we create the right conditions on chain for people to move sooner rather than later. Because I think one of the biggest challenges with Bitcoin holders is like they just don't. You've got to really create a reason for them to care. If they're thinking Bitcoin's going to double, triple, 5x, 10x, whatever. Taking on any amount of risk that they lose that money or isn't worth it for them.
But it's not just a Lombard or Bob or like a Bitcoin focused project problem. It's a problem that Ava has, that Morpho has. Like everybody sees Bitcoin as the way to get more capital on chain. Like if you think about it, what's the only pristine collateral that's crypto native that we have? We have ETH, we have Bitcoin. Okay, with the native L1 tokens, but Bitcoin dwarfs everything else. And then so what are we observing right now? You have, and still everybody wants Bitcoin, right? Even though the L2 hype has died down, the appetite for Bitcoin on chain has not changed at all. Like everybody still wants more BTC because it is the best collateral. And then people want RWAs. But then the thing is with RWAs, it's like you're kind of trying to merge on-chain. Like it's more like on-chain finance than DeFi. I think that's kind of the two terms that I have heard people bring up. Like on-chain finance is great, but it's not. It's different than DeFi is because you're basically bringing in something that already exists in TradFi and you're putting it on DeFi rails to make it better. I think the right way to see Bitcoin DeFi today is the same way. Like you're taking what people can do with Bitcoin off chain and you're bringing it on chain. And the whole reason should be that it's a better product, not that you can just do it in a transparent and more secure manner. There has to be a reason for people to move, as you say. But I do think that the rates on chain will be better and more transparent. And I do feel that looking at all the neobanks launch on chain now, that we will be able to provide a much better service to both retail and institutions. But it will take time. Like without doubt, it will take some time. But that's the thing with Bitcoin. I think that's the beauty of it. Like if you win in the entire crypto game. It's not just, you won within one ecosystem and you're the best, niche product. No, like you win in the biggest niche there is in crypto, right? You just win the entire market because you suddenly can become the largest protocol in the space.
100%. Alexei, were you, when you were discussing sort of on-chain finance versus DeFi, how do you think about that with respect to Bitcoin holders? It sounded like maybe you were expressing some sort of bearishness or pessimism around off-chain finance coming on-chain, and actually like what Bitcoin holders are looking for is like purist DeFi.
No, I don't think so. I'm not at all pessimistic about RWAs. I think it's a very interesting example of showcasing what it means to be able to trade 24/7 with a wallet on any app without having to think about like signing up with 5 different accounts, fragmenting your capital. You have one wallet, you can move cross-chain, you can use any protocol. It's 24/7. Like on-chain finance is beautiful. And I think our tokenizing stocks, it's cool, right? Yes, like there are limitations and it's not necessarily pristine collateral, but at the end of the day, what is pristine, right? Just because it's cryptographically secured, like Bitcoin is not the only collateral in the world. And stocks exist for a reason, and I think bringing in stocks on chain is certainly going to bring more users. It might temporarily even bring more users than Bitcoin did for a while. But at the end of the day, I think issuers come and go. There will be different versions of stocks on chain. There might be like winner takes it all market, but Bitcoin is always going to be there. What I think we need to do, however, is approach Bitcoin DeFi the same way you see RWA issuers or protocols approaching RWAs right now. And basically, there you have a very established market. You have to be better than I don't know, FlatEx or someone else, like these off-chain brokers. You have to be better than them for users to come on chain. And for the longest time, I feel like with Bitcoin DeFi, we would come and say, well, you have to bring your Bitcoin into DeFi. And then the question is like, why? And the answer is like, yeah, but because it's better, it's more transparent, it's more secure. But I think it's important to realize that the portion of people that really want to DeFi is already in DeFi, right? The next wave of users, the next big unlock is going to be people who don't necessarily care whether it's DeFi or not. They care about the end product. They care about, do they get a better experience? Is the UX better? Do they get better yield? Is it cheaper for them to borrow? Can they spend better? And I feel like for me, like I'm actually very excited about building right now, because we're now at a point where the industry has matured again. There's a lot of infra that has been built. On-chain is really better in many things. We have so many tools that you can actually now build a much better product than off-chain lenders, for example, on-chain, and you can go and compete. And I'm very sure that in the next couple of years, every off-chain lender will have to be sourcing capital on-chain as well, or basically offer the users on-chain yield, on-chain access, or they will struggle and go under and be replaced.
Yeah, 100%. I think that's a great take. I'm sure we both spent a lot of time studying the sort of Coinbase Morpho product they launched. Give users access to Bitcoin-backed loans directly through the Coinbase interface. Users don't even really know it's DeFi in the back end. And I didn't realize this at the time, but there was like a tweet a few days ago talking about how they're charging 2% origination fees. Absolutely insane. I mean, I think the amount of revenue that Coinbase is making off that product, I think, sort of surprised everybody in one way, and now has motivated every fintech exchange out there to copy that product as soon as possible, recognizing just how much money there is to be made. And my take on that is that if we were sitting here having this conversation before Coinbase launched that product, and they talked about like charging 2% origination fees for people to come, to borrow against their Bitcoin on chain or something like that, I feel like we would have said that was not a competitive product, and yet here it is. So if that's not massive evidence of users excited about coming on chain as soon as possible, I don't know what is. I mean, even I feel like this may even be contradictory to my earlier comments around like, oh, Bitcoin is productive off chain already. We're just trying to pitch the benefits of on chain. It seems like in the midst of a huge capital base in Bitcoin with many pockets of capital, that there are many people who are just fundamentally underserved. And I mean, underserved to the tune of billions of dollars. I think Coinbase has done like $2 billion in origination or something like this. That type of activity is extremely meaningful in on-chain terms. Maybe a little bit less so in off-chain terms, but still massive amount of capital that came on through that. Certainly that's only the start.
Well, if we're talking about, I think as we get to the end of the show, I think it would be interesting to dive in a bit deeper into where we see the activity coming from, because I think there's kind of two pockets of Bitcoin that you can target, right? There is institutions and there is retail, like the everyday users, people who just want to have access to better personal finance. What's your take? Like, because mortgages are clearly not necessarily an institutional product. They're targeted at retail users. At least that's how it's currently presented. And I honestly think it's also where there's lots of demand. What do you see happening? I mean, ultimately, I think we can both agree, both institutions and retail will come on chain.
Yeah.
The question here is, what will happen first? And where do you think right now is the bigger underserved markets?
Yeah, it's a good question. I think without a doubt, Lombard's very institutionally focused right now because of some of the things I've said earlier, that Bitcoin as collateral is finding fundamental footing much faster than any other Bitcoin use case. this is, predominantly the Bitcoin borrowers or the people leveraging these types of, products that leverage Bitcoin borrowing are institutional counterparties. They do this off chain at massive scale. If they could do this on chain with, limited risk, self custody, and rates that are better than off chain, this seems like a great pitch to bring a lot of Bitcoin on chain. So certainly that's a big focus. But with that said, it's sometimes a little bit hard to. So I would say, like, Lombard isn't explicitly, spending a lot of time going after, a retail audience, right? But what I will say is two things. One is, I think, again and again, I'm surprised by how much retail demand there is for Bitcoin. Every time I say that, that the game is institutional, there's evidence of retail coming in at massive scale. There was a post a little while back, I think, from Manifold, that discussed this idea of pro-tail, where there are sort of non-institutional but counterparties who are extremely heavy users of DeFi in one way or another. This is like the sort of whales versus the institutions. So I think there's certainly still, when we think about launching new products and bootstrapping utility for something, even if it's an institutional product, I think there's a big wave of non-institutional users who will operate Bitcoin DeFi at scale. So it's certainly not a segment we're ignoring. In fact, when we launch Bitcoin Smart Accounts, the new sort of Bitcoin solution we have that allows for self custody, or keep your Bitcoin within a custodian represented on chain. I think Bob has a similar product. We're almost certainly going to launch this to a retail pro-tail audience first, and then upgrade to institutional. Of course, kind of like recognizing slow, institutional onboarding. But retail and pro-tail is a great way to sort of bootstrap liquidity. And then related to all of this is the fact that when in finance, it's sometimes hard to create a clear separation between retail and institutional, because the two are symbiotic. There's like this idea that, institutional liquidity only comes on chain when there's dumb retail capital for them to go after, or something like this. It's sort of like Hyperliquid is now getting to the point where it's starting to be institutionally accepted, but only because they bootstrapped that retail user base first. So collateral as a use case doesn't really require retail liquidity in terms of Bitcoin. It requires retail liquidity, or rather retail usage on chain for stablecoins, which seems to be here in a really big way. So perhaps that sort of provides the foundation for rates. But in a Bitcoin sense, I think we're still waiting for like broad retail usage of BTC on chain. And maybe that's not actually what we're going after. As long as retail's on chain using DeFi in some manner, Bitcoin maybe just needs to be the sort of foundation of finance, and it doesn't need to be like something that people are using every single day. So I think that covers it. I think there's one more thing I was going to say, but maybe I'll pass it over to you, Alexei, and if you have anything to follow up with there.
No, I mean, I think we've made a pretty good pitch. I think we're also being quite honest about what happened with Bitcoin DeFi and where we're at right now.
Yeah.
I want to maybe towards at the end just maybe talk about sentiment and where we are right now in the market. I feel like Bitcoin's been down, Bitcoin's been moving sideways. We've had debates on the quantum threat and how bad that could be or not or won't be, right? And there's still debates, but it has quieted down a bit, right? There's as things happen, right? Like something is really hot, people debate, and then kind of it quiets down and everybody forgets.
Yeah.
It's still a threat. Question is obviously how big of a threat is that? Don't have to discuss this now, but I think what's more interesting is how big of a threat is it perceived outside of our bubble? And maybe that's something that you can shed more light on, as you talk to institutional holders. Are they worried? And then after that, I think we just have to talk about strategy briefly, and what's going on there, and what that again means for Bitcoin. I will preempt the question with, I think right now is a perfect time to actually build lending trading products around BTC, because when Bitcoin's down, there's a lot of people actually buying it, and it's a very good time to invest if you think that this is the bottom is in. Again, not financial advice, but if you think the bottom's in, then you should be buying Bitcoin. And it's also a great time to borrow against your Bitcoin, because again, then you can either borrow against BTC to buy more Bitcoin or do something else, and you're pretty low at risk in the sense of getting liquidated, because if you think that Bitcoin's going to go up from here, well, you're pretty well off. But what's your take on quantum threats? And maybe we can package strategy in there as well. Like, what do you think is the sentiment on the institutional side right now? Are people skeptical? Are people worried, or has it not affected the sentiment at all?
Yeah, sentiment is in a very weird place all around. Everything that we could have hoped and dreamed for Bitcoin came true in the past like 18 months. And yet we find ourselves with prices depressed, with a big new entrant into the ecosystem strategy who's launching these products, of course, with Stretch trading down to, I think I saw $75 today, certainly shaking a lot of demand. You sort of have this big sell pressure potentially on the horizon. And quantum risk, I think, certainly not a quantum expert, but I will say from conversations with Bitcoin LPs, there's sort of like a degree of caution, I think, where people don't fully understand the problem. They don't know who to listen to. They don't know if this is a near-term risk or a long-term risk. So it's one of those things where I think it's a little bit reflexive. When price is going up, they're not thinking about it. When price is going down, they're thinking, oh, is there something I'm missing? Is there something somebody else knows? So, unfortunately, prices determine sentiment in a lot of ways. And I think we're in this weird place where fundamentally, I think Bitcoin is in one of the best places it's ever been, if not pretty damn close to the best place it's been. Sovereign adoption, pretty clear evidence of decorrelation from other asset classes in big moments. These were things that when Bitcoin was first getting started would have been like success type metrics that they were looking to see. Now we're there, and yet Bitcoin sentiment seems to be so poor. The thing that keeps me going is that it's so clear that the fundamental thesis has played out, both for Bitcoin and on-chain finance. So without a doubt, I know both categories are going to continue to grow for the next 5-10 years. And when you run the math on that, if you assume some Bitcoin price appreciation and you assume Bitcoin, all assets come on chain, you arrive at some conclusion along the idea of, at least $1 trillion in Bitcoin one day will be on chain. One day, being, sooner rather than later. And if that's the case, this category is so damn big that it doesn't matter if it happens this year, next year, or in 5 years, there's going to be a crazy amount of opportunity, to happen here. And so when I distill all of that down to the short term, well, one, I try not to look at prices. I try not to care about the short term that much. When I feel like when I was at Polychain, I used to stare at prices all day, and now I don't even have like CoinGecko on my phone anymore to avoid this. But the only thing that I can rationalize about what's happening short term is that we're in this sort of transitionary phase where old money is transferring to new money, and people who think that we've accomplished everything we could have accomplished in Bitcoin have sort of are like in the process of selling, and we're transitioning into this new sort of this new wave of institutional adoption. I think we've seen there's been all these announcements over the past 12 months that have just kind of been announcements of so-and-so big financial institution is adding Bitcoin or adding ETF or something like that, but it sort of hasn't come online yet. Like the amount of demand that I think has been sitting on the sidelines about to access Bitcoin markets, but hasn't actually gone through with executing this is immense. Like, for example, I think Schwab just added Bitcoin trading yesterday or something like this, but that announcement came out, 6 or 8 months ago. So I think we're going to see a lot more of this, where there's latent institutional demand for Bitcoin sitting on the sidelines right now that will come online over the next 24 months. That'll get us back to that point where, demand for Bitcoin is outpacing the amount of supply that's exiting the system. And then we're back into a period where sentiment revives. It's sort of a shame that prices drive sentiment as much as they do, which then in turn drives fundamentals. But it's also been the biggest sort of superpower of Bitcoin, in that reflexivity takes us to new highs, takes us to probably higher highs than we'd be able to reach on our own. So I'd say cautiously optimistic on my end, incredibly optimistic if you extend the time horizon out, more than like 6 or 8 months.
Yeah, it's super interesting. Like, we're down and the market is kind of a bit cooler and everything, but don't know, like I feel like everybody's still optimistic. Like I remember when I got started with Bitcoin, like people were saying it's dead. It had just crashed to $200, and it was like, yeah, Bitcoin's dead. That's it. And it wasn't
Yeah.
the first time. I don't hear anyone saying Bitcoin's dead, right?
Right.
Like I think like everybody agrees it's not going anywhere, and well, demand is going to keep increasing, especially as inflation increases, especially as we're entering a rather less stable geopolitical era, which isn't
Yeah.
great, to be fair. It's not something to be particularly happy about, but it will drive demand for Bitcoin.
Yeah.
And I mean, I think it only takes like the interesting thing is like there have been so many big players moving into Bitcoin, announcing moves, buy the rumor, sell the news. Like I think a lot of these things have me kind of being hyped up last cycle, like in the cycle Bitcoin was going up. If the US comes in line with a strategic reserve, I mean, that alone will drive prices up insanely. And there are so many other catalysts that are still on the horizon. So I'm bullish on Bitcoin. I think it's a very good time to buy. I have friends from TradFi that I have been debating crypto for the longest time, and one of them texted me recently like, yeah, he just bought. And I was like, what? Yeah, he sold all his stocks, he bought Bitcoin. I was like, okay, well, that's interesting, right? Because these are like, and if you I think this is just an example of a lot of smart money. I think is going to be entering Bitcoin now, or is already entering, and we just don't know. So yeah, again, this is not financial advice. We're not here to give financial advice, but I think Bitcoin's in a very good state, and especially a lot of the hype has died down a bit around DeFi for Bitcoin. But I think there's a lot of fundamentals that are left, and there's a lot of things that actually have been built, and you'll be surprised how many teams are actually shipping and building. And like Tether is going big again on like USDT on Bitcoin for round 2, basically. So I think there's a lot of activity happening and will be happening over next year to just keep driving innovation there. Jacob, any last words, any last opinions before we round out?
No, Alexei, thanks for having me. I was just going to say the best take on this bear market that I've heard is that this is the first time in crypto's history where fundamentals have outpaced price. It's never been like this before. That's probably why it feels a little bit uncomfy in this bear market. But surely when fundamentals are outpacing price, those with a long-term perspective will be rewarded. So exciting time to be building.
Cool. Jacob, thank you so much for joining us. Thanks all for listening. We'll be back with another episode of Bullish on Bitcoin in 2 weeks from now. Stay tuned and have a nice weekend. Bye-bye.
Awesome. Thanks.